Hello, it's Paul from ESPC, and it's
Megan.
Welcome to the ESPC show. And look at our colours today.
I know
we're very colourful, aren't we?
Yeah, we're wearing nice and bright colours.
But no colourful language in the episode.
Absolutely none.
But some really interesting and some great insights into this episode.
Yep. So today we're talking about all things mortgages. We've got Paul Demarco and Lisa Bell from ESPC Mortgages joining us today. To chat about the market.
So I think without further ado, let's dive right in.
So guys, thanks so much for coming to join us today. Really appreciate you coming to chat with us about the mortgage market. But yeah, I thought to just kick off, what is the current state of the mortgage market in Scotland just now?
Yeah, generally a little bit slow at the moment. I feel like a lot of buyers are erring on the side of caution a little bit, waiting to see what might be announced with the Chancellor's budget in October. Lots and lots of inquiries and things coming in at the moment, but a lot of buyers not actually going on to purchase properties at the moment. So we've seen a little bit of a go slow just now, but certainly still a lot of people making purchases.
So, as we know, the Bank of England cut rates in, I think it was August, brought it down from 5.25 to 5. It was held at the most recent one, but I think the sort of signalling that we might see rates come lower. But yeah, how has the mortgage market reacted to that last cut?
Yeah, the last cut was good because fixed rates were affected, and they did come down very slowly with the majority of lenders, quite a number of times actually. And then, funny enough, there was a couple of lenders round about sort of the beginning of September that actually increased their rates slightly. And then I've noticed recently again that a couple of the lenders, NatWest for example, they reduced their rates again. So it has been a little bit of a mixed bag, but mainly south rather than north in terms of the rates. And it's obviously better for clients because the rates are lower.
I was trying to work out where South was there, right? So rates have been coming down rather than going up. I think I did read somewhere that we've probably had a bit of a mortgage competition, a bit of a mortgage war out there, lenders competing to get your business. Has there been a bit of that?
Yeah, there is, especially on remortgages, I'd say. Definitely on remortgages. A lot of the... When we do what's called our analysis on an existing client's mortgage, so say they're with one lender, that's usually classed, the terminology for that's called a product transfer, and we always analyse that against the current remortgage rates. Yep. And I've noticed recently, very recently actually, that the remortgage rates are starting to get slightly better than the product transfer rates. Okay. And it's because I think a lot of them now want the business. Yeah. The market being a bit sluggish. I think that's the main reason for it. And so a lot of them are actually have reduced the rates right down, especially on remortgages. Okay,
and that's interesting because I would imagine with those mortgages, potentially there's more equity in those properties, so it's a safer loan, if you like, for a safer bet for a lender.
Yeah, so from a lender's perspective, it is a safer bet, and the risk factors are a lot less.
Sure.
Yeah.
Okay.
Yeah.
And are we seeing any other trends in mortgage lending at the moment?
Not, apart from the decrease in the rates, I'd say probably not. Not to my knowledge, apart from, as I mentioned earlier, about remortgages.
Definitely more competitive on that side.
Yeah, that's a bit the only thing I can really
isn't
think
it?
of.
Because you think you're gonna, you just might look again, and there might be something better out there for you.
What is the typical deposit needed right now then for first-time buyers and for anybody remortgaging?
For remortgaging, no deposit required because you're using the equity in your property and you're transferring your existing mortgage to a new lender, so no deposit there. Typically for a first-time buyer, your sort of minimum deposit would be 5%, very much based on credit scoring. So credit scoring is a lot tighter at the lesser deposit. So I'd say maybe around 10% ideally, but can be done on 5% subject to your credit score.
Oh, that's interesting. Is there? I think we read somewhere at one point there was 100% mortgage in the market. Yeah. I guess it must be, the criteria must be very tight or very specific. Is it for that?
Yeah, so very much based on your rental that you're paying your landlord at the moment.
So
and
you've
your
got to be a
track history
tenant,
with that.
right.
Yeah, you've got to be a tenant in a property, and it's based around your track record with that. So yeah, a little bit more difficult to get. But yeah, certainly still out there.
Have you guys ever done one in recent?
I've never done one, believe it or not.
No, okay.
Not sure if the market here is conducive to that, to be honest with you.
Yeah. Okay.
Like to do one, obviously, to
Yeah.
try and help somebody, but
You
no
heard it
one's-
first.
Yeah, no one
Any
has,
tenants out there?
yeah, but no one has actually.
Come forward.
Well, yeah, I mean, it's not something I've identified, so
Okay.
really, I know it's a strange situation, but not
Mhm.
really sort of identified anyone.
Okay.
in that category.
And I guess the interest rate on a 100% mortgage, versus a 95 versus 90, is it that simplistic? The more deposit you got,
Yeah.
the better your rate,
Yeah.
generally?
Yeah, definitely,
So,
yeah, it'll be higher.
Higher
Yeah.
interest rates, and then you've also got the situation where you could end up a mortgage prisoner because you might end up in a negative equity situation if you're looking at a 100% mortgage. So yeah, definitely something that you'd like to consider when you're looking at that.
Okay. We were talking just a bit back there about remortgages.
Mhm.
Is now a good time to remortgage, or should people wait, or does it just depend on circumstance? I've almost answered the question for you, Paul, but go on.
Remortgaging now, well, if their deal comes to the end of the fixed rate, yes, definitely.
Because the
But if it-
variable rate's
yeah,
quite
yeah,
pain.
yeah.
Just
'cause
explain that, Paul.
yeah.
So if I was on a fixed rate
yeah.
and it ends, if I'm staying with that lender at that point, it generally goes to the variable rate, does it? Which is normally quite a lot higher, isn't it?
Yeah, it can be, it can be like, it depends on the interest rate and what we call the loan to value. That's the amount of mortgage you take in
Mhm.
relation to what equity you've got in your property, what the
Yeah.
value is. But it can be as high as 3% of a difference.
Okay.
So sometimes it may be 3.5%.
So you're going to notice
Would you
that,
agree with
aren't you?
Lisa? About
Yeah.
Some
3.5%?
lenders are
Yeah.
round
Yeah.
about anywhere between 7 and 10% really for the standard variable rate, so
Okay.
quite
Yeah,
high.
it's really high. You wouldn't want to go on that.
You wouldn't
I'm
want,
like,
so
no.
what's the optimum period then? As you say, you want to avoid that. So how earlier should you be talking to you guys about,
Well-
coming to the end of remortgage? Is it 3 months, a month, 6 months? Where would you?
Lender dependent. So
Yeah.
some lenders are offering to start looking at what new interest rates they might offer you 6 months in advance.
Yeah.
Some are still around 3
Three.
months. But yeah, very much varies lender to lender.
Yeah,
Right.
and with the decrease recently in the actual fixed rates, a lot of clients have waited, or what we have done is locked them into a deal for now, and then keep looking at it on a monthly basis in case we could get them a slightly better rate.
Okay,
Because
that's
we
good.
can do that right up to pretty much the last minute.
Wow.
Up until about 2-3 weeks before, eh?
So you don't have to push the button on it until
No.
you keep going, right, one more look. Okay, best out there.
Well, we've
Take
already
it.
tied them in, okay, to a deal, for example.
When you
Well,
say what with one lender?
with one lender, yeah,
okay.
mainly if this is the existing lender.
Right.
If it's a remortgage, as well, you can do that obviously, but it's not as common. But certainly with an existing client staying with the same lender, you can lock them into a deal, and then if the rate was to drop the following month or the following month after that, you can then cancel that existing deal and go and do another deal which is lower.
But there's only a certain amount of times you can do that. Is that right, or could you do it every single time
You
the
can do
rate
as many
changed?
times as you want, as far as I'm concerned. Yeah.
Yeah, so it gives you that peace of mind that you've locked in a
Do as many
deal
times
now,
as you want.
but then if rates continue to drop, you can take advantage of that decrease and secure a new deal, but then you've also got the peace of mind that you've got something locked in with your provider, so if there is any increases, you've still got that slightly
good
lower rate
strategy, isn't it?
locked in. Generally tends to just be existing providers that offer that.
Yeah.
But I mean, we have seen this. I mean, sometimes a deal can be there and then funds, the bank pulls it.
Yeah.
So if you've locked it in, is that
That's
Yeah.
secured, yeah.
that's secure?
Secured, yeah. Secured, yeah.
That's a good strategy.
I know.
Are there any other support options or grants available for any first-time buyers or anyone who's looking to remortgage and might be quite scared about the new rate that they might be going on?
Well, for first-time buyers, there isn't any more, because there was the LIFT scheme, the LIFT scheme, sorry, which is now kind of, the funds have now been all utilised for this year, so that's gone. Hopefully it might come back next year. That's a scheme where you can get up to 40% deposit from the actual link housing, which is a good scheme. gets them on the on the ladder, gets first time buyers on the ladder.
But it goes quite quickly.
It does. It goes really, really quickly.
Yeah.
The last time, it was unbelievable. I remember the days it used to last nearly about 9 months, but it was a month the last time.
Just shows you, doesn't it?
I know. So people were snapping that up. Remortgages, the only thing there really is you always get, if you want to have a deal like this, you'll get a free survey. Some lenders do offer a cashback incentive instead, but it depends on how much the cashback is, because it's really got to kind of match what one of the ESPC solicitors would offer as a package deal for the fees. And if it's kind of the same, obviously you would probably just go and ask one of the ESPC solicitors to do the actual remortgage. But we tend to find that cashbacks can only sometimes be, 250, 500, Lisa, something like that? Yeah, I think you're going to need more than that to actually match the... Because I know what a solicitor will charge X, but then you've got extra costs on top of that, obviously. So unless they can do the whole thing for like 500 quid, it's probably take advantage really of the remortgage package.
Okay.
Lenders hopefully in the future will bring out bigger cashbacks, but just now I can't see any for more than £500.
Yeah, I was going to say, is there any support you'd like to see come in for first-time buyers?
I'd like to see more bigger cashbacks. So we don't have to use the lender's solicitor. The client can use their own one. Which is great.
Yeah.
You know?
A lot of the time the cashbacks are instead of free legals being paid for you, so you've got the cashback there to cover the legal fees that you would have to pay for the remortgage, so that's usually why they add the cashback into those products.
Sure. Read in the paper recently, it's been this talk of 30-year, 35, 40-year mortgages. Are you seeing any of that?
Yeah, we are. Yeah. I don't do many 40, but you do get the very odd one. A lot of mine are 35 years. You'll be the same, eh?
From affordability point of view, because we're having to actually stress test the mortgage based on the standard variable rate, which is quite high at the moment, we're sometimes having to look at that longer term to give a little stretch in affordability basis for them, because we have to show that it will remain affordable if they were to move on that slightly standard higher rate at the moment, which obviously is quite high. So yeah, it's
sure. So basically what you're saying there is, because it's a longer term of the mortgage, the monthly repayments are lower, but you're paying them over, instead of being over 20 years or 25 years, you're paying an extra, can't believe I'm saying this, 10 years on top. But it gets you there, it gets you on the ladder. And can you, so if you get in there and your circumstances improve and you find yourself earning better money in 3 years' time or 5 years' time, can you shorten the length of your...
Of course you can.
Absolutely,
You can overpay.
You
can overpay usually by, most lenders are 10% of the balance of the outstanding mortgage. And then when you go to kind of review your mortgage again in the future, that's a good time to kind of reduce the term if you want as well.
Okay. But it's a means to an end then, isn't it? If as you say, you're trying to get there on the affordability. That's one of the tricks up your sleeve that you can do, but I guess you really have to make it clear to the client. This is a long-term commitment you're making at this point. So it's not for the likes of me and you, Paul. 35 years. How would you politely ask me?
I think that ship's already sailed, unfortunately. But never mind.
I don't think I'd see the end of a 40-year mortgage. Okay, well, talking of where we might see the end of things, I've just got a final question here that I was just going to ask you just about interest rates and mortgage rates. Bank of England's going to meet twice more this year, November and December. Where do you see rates, or what do you see happening with rates in the next 6 months and maybe next 12
months? Okay. So hopefully the Bank of England will reduce the rate at least once this year. And then maybe into, say, maybe March time again, or even maybe February again, which hopefully by 2.25% drops, which will definitely have an effect, has an effect on tracker rates as well, definitely, without a shadow of doubt. But with fixed rates, they should also reduce as well. So what you'll find is that the mortgage rates should be, in the next sort of 6 months, definitely a lot less. And within 12 months, reading a couple of economist reports, they're looking in 12 months for the base rate to be round about 4%. Which would mean fixed rates will always be lower usually than the base rate. So you're looking in the future and I'm a positive person, so I'd like to think you get fixed rates maybe at 3.5%. I don't know what you think, Lisa.
Yeah, fingers crossed.
Yeah, that'd be a nice place to be, wouldn't it, really?
It'd be a great place to be.
Yeah, I mean, they are signalling certainly maybe 4 cuts next year. So, yeah, we may, I mean, could we see a base rate under 4? Who knows? But yeah.
Well, hopefully, yeah. I mean, being realistic, 4 would be good with fixed rates at 3.5.
Yeah,
and then
absolutely.
hopefully things keep continuing. Looking to 2 years from now, don't think we're going to get back 1.5% anymore on fixed rates. I think these days have gone in this kind of generation anyway. But hopefully, maybe 3%, maybe. Yeah.
Yeah, fingers crossed.
Yes.
We will see. I mean, you've heard it here first.
Yeah.
And again, this is all assuming nothing happens on the macro stage.
Exactly,
we don't have another COVID and all these
yeah.
other things, which, again, supply issues, inflation flies, and then the Bank of England has to pull the lever and put rates up. So
we have a situation like we did with all the other things like the wars, the well, not so much COVID, but the wars and the cost of living crisis, energy crisis, etc., etc. The list is endless. So hopefully that is now
behind
not
us.
Behind us. That's a good word to use. Behind us, yeah.
And are you seeing more people when they're going to remortgage go for the shorter term in anticipation that the rates are going to drop, or are people still looking in for longer?
No, definitely.
Very tactical then.
Yeah, tactical. Yeah.
So we'll see a lot of more remortgaging.
Yeah, a lot. I mean, I can't remember.
What's the shortest period you can fix for?
Well, 2 years. However, some existing lenders, not many, I've done a couple. Barclays, Santander do a 1 year fixed rate.
Oh, really?
I've done a couple of them.
So
as
you
well.
get locked in for a year, and then after 9 months, you're talking to you guys again about.
Yeah. I'd like to see that introduced by more lenders. That'd be good.
I think we might.
But I don't know if they'll do it. But then again, 2 years for definite is mainly currently the kind of most popular term.
Yeah. You
But
have slightly
95%,
more cautious people who want to fix in for the 5 just because they're maybe a little bit panicked about how that might look. But most people generally favouring the 2 year fixed rates.
Could you fix for 25 years?
That'd
be a heck of a bet, wouldn't it?
Well, actually, believe it or not, you can. I mean, I've not researched anything for 25 years, but I was looking about a couple of weeks ago just to see. But you can definitely do for 10.
10 years, yeah.
That'd be interesting to plot on a graph, wouldn't it? Versus that versus the lower and higher.
The 10-year fixed rates, Lisa, were lower, obviously, than the 5 and the 2, because they're locking in. They're lower. That's where I did see lower than 4%. That's when I seen 3.99.
Sure.
Yeah.
But the early redemption penalty.
Oh,
so if you decide after 2 years, you're going to pay a lot back on you at that point.
Yeah.
Okay, swings and roundabouts.
Yeah, there was something recently, and I haven't seen any recently, called flexible fixed. Like the likes of Conference Mill Society used to do them, and I haven't seen one for a while where you're in a fixed rate for 2 years, but there's no early redemption penalties.
So you could just say, right, I've changed my mind.
Yeah. But I've not seen any of these for a while, so hopefully...
I wonder why.
Hopefully, I wonder, exactly. They might not come back for a while, but hopefully they will,
Well, I think what I've learned from that is there's a lot of products out there. And who should they go and talk to, do you think?
If anyone wants to get in touch with you guys and use your services, how can they do that?
They can either call Lisa or I directly, as per the website, or the easiest way, to be honest with you, is to go onto the ESPC website and click on the mortgage icon, and it will come up with the phone number and the actual email address that you can actually contact us. And there's another way, isn't there?
Well, they could walk in, I guess.
They can walk in, yes. That's the other one.
That's the other one.
We've had a few of these this week already, haven't we?
I knew there was another way.
We've had a few.
Have you? That's good.
Actually,
and just to be clear, people can come in and pick your brains, have a chat with you, and there's no obligation and there's no cost for that.
But walk-ins, phone calls, website,
Okay. And you're looking at all of the market, aren't you?
Yes,
it's
we're
not
looking
just
at the whole of the market.
The bank's going to tell you about their own products. You can talk about everybody's.
And we can also do that as well, because I need to mention this to you. Most people will definitely need protection for their mortgage as well. So that's the likes of your life assurance, for example, your illness cover. We're completely independent for that as well.
Okay.
Just to mention that.
Good.
That's really where we benefit right now to clients, particularly remortgaging clients, where we can look at the whole of the market for them and give them the best options across the market, as opposed to them just going directly to their lender
That's
and
very
just
narrow
having
then,
those
isn't it? Yeah,
deals that they've provided there.
Yeah.
So yeah, definitely a good time to use an independent advisor at the moment.
Sounds it. What a great place to leave it.
Yeah, great. Thanks so
Great,
much, guys.
thank
Thanks,
you very
guys.
much.
Appreciate
That's
it.
great.
Well, I enjoyed that. I mean, we spent a lot of time talking about fixed rates and remortgaging and stuff, but that's probably where the market's at, I think.
Yeah, and I think, as Lisa said right at the start, the market does seem to be a bit slower. I think people are just anticipating what's to come.
Plenty of pent-up demand there, though, I think.
Yeah, and I think, over the next couple of years, we'll see a lot of people remortgaging
I think so, yeah. The tactical remortgages we described there.
Yeah.
But, the market's looking good, plenty of pent-up demand. I was only looking today for the third month in the run, viewing requests well up on last year. So these people are going to be buying, and I think they're just shopping around for the best mortgage right now.
Yeah, absolutely. And a lot of tools for first-time buyers to pull in order to get an affordable mortgage.
Absolutely, yeah. And we should give Lisa a special mention. That was her first time on the podcast, though. She did really well.
Yeah, no, she was a great guest, and I'm sure she'll be back on again
Absolutely.
soon.
And here most days if you ever want to pop in. So
Yeah.
anyway, thanks for listening. Thanks for watching. Again, if there's anything else over and above, you can always find lots of information on espc.com. But from me and from
me,
it's goodbye. Take care. Bye-bye.